make some introductions and describe the procedure for the meeting tonight. For committee members, starting with our youth and governance member that's present is David Wilkie. On my right side of the aisle in front of me, our excused youth and governance members are Riley Boyce and Caleb Wilson. And for staff, sitting down next to David is Todd Galante, our Planning and Development Director. To my right is Senior Planner Rashid Allen, sitting instead for our Zoning Administrator Roger Lane. To my left is Dan Everson, Assistant Zoning Administrator. For committee members, starting on my left side of the aisle here, we have Supervisor Jerry Pollard, Al Matano, Mary Kolar, and Bob Salov, and I am Patrick Miles. All right, we only have one item on the next portion of our agenda, which is zoning map amendments and conditional use permit applications from previous meetings. This is an item for which we've already held a public hearing, so we will not be taking public testimony tonight because we have already held a meeting for that. However, we are collecting registrations, and they will be noted. That I will not be reading through them. If you're wishing to register in support or opposition, it also lets us know that who's here available for questions that committee members may have any for you. Let's see, and if this conditional use permit application is approved tonight, committee action is final. It does not go to the county board unless it were to be appealed, of course. So with that, I will move on to that first and only item, which is conditional use permit 2291, Wisconsin Electric Power and Enbridge Energy. With that staff update.
Sure. Enbridge is requesting approval of this conditional use permit for installation of a new pumping station along its existing Line 61 petroleum pipeline at 5635 Cherry Lane in Section 14 of the town of Medina. This petition was first heard by the Zoning Committee at a public hearing on October 28th of 2014 and has appeared on the committee's agenda several times since the original public hearing. Concerns have been expressed about the long-term nature of the use and the applicant's ability to pay for cleanup and remediation in the event of a catastrophic oil spill. In December of 2014, Dane County Corporation Council issued a written opinion regarding this issue and indicating that the committee could require evidence of the applicant's financial responsibility to clean up a spill. At the January 27th meeting, staff was directed to investigate the possibility of hiring an insurance expert for the purposes of determining the insurance needs of the proposal. We have since contracted with Mr. David Dibdahl of American Risk Management Resources Network for that service. Mr. Dibdahl's report was issued on April 8th, and he is here this evening to answer any questions the committee may have. The town of Medina has approved this petition subject to 2 conditions. The staff report includes a list of possible conditions of approval, which include the town's condition, Mr. Dibdahl's recommendations, and also several staff conditions. I'm happy to read through those if you would like.
Committee members want Rashid to read through those? Yeah.
Sure. So, condition number 1, the pumping station shall be located and constructed as depicted on the presented plans. I'm going to make this bigger so that people can actually see. Number 2, Enbridge shall be responsible for obtaining a road use agreement with the town of Medina prior to the construction of the pumping station to ensure repairs for any damage to local roadways. Number 3, a spill containment basin shall be constructed around the pumping station to handle a minimum of a 60-minute flow prior to the operation of the pumping station. Number 4, the pumping station shall be designed and constructed to limit the operating noise to a maximum of 50 decibels as measured at property lines. Exterior lighting, number 5, shall be down shrouded to limit light pollution onto adjoining property. Number 6, 7, and 8 regard the insurance consultant recommendations. Number 6, Enbridge shall agree to indemnify and hold harmless Dane County for pollution losses per the terms as detailed in Enbridge's proposal titled Conditional Use Permit Conditions, submitted and entered into the public record on January 27th of 2015, incorporated into this permit by reference. Number 7, Enbridge shall procure and maintain liability insurance as follows. $100 million limits in general liability insurance with a time element exception to the pollution exclusion, which is currently in place, and $25 million of environmental impairment liability insurance. Enbridge shall list Dane County as an additional insured on the total $125 million of combined liability insurance. Number 8, the required general liability insurance and environmental impairment liability insurances shall meet the technical insurance specifications listed in Appendix A of the insurance consultant's report, which is also incorporated into the permit by reference. There were several other conditions that essentially reflect emergency response planning actions that Enbridge has indicated it intends to take. Number 9, applicants shall maintain an emergency response plan that is in compliance with the applicable requirements of local, state, and federal agencies with jurisdiction. A copy of the emergency response plan shall be made available to the Dane County Department of Emergency Management Hazardous Materials Planner within 30 days of permit approval. Number 10, the applicant warrants that it will at all times have available on the county and/or regional level sufficient emergency response staff, equipment, and materials to immediately and fully respond to any leak, spill, leak, rupture, or other release of petroleum products or hazardous substances from applicant's facilities. Number 11, on a biennial basis, the applicant shall conduct training exercises for first responders in coordination with the fire chiefs in the Waterloo and Marshall area. First such exercise shall be conducted within 30 days of completion of the pumping station, with future exercises scheduled in consultation with the fire chiefs. The applicant shall provide advance notice of the scheduled training exercises to the Dane County Hazardous Materials Planner and invite his or her participation and involvement at the exercises. Number 12 simply reflects that the emergency, those aforementioned emergency response conditions do not relieve the applicant of any applicable regulatory responsibilities related to safety and emergency response planning.
Thank you, Chief. Okay, committee members, questions for staff or the consultants? Supervisor Pulla.
I move approval with staff conditions 1 through 12 and the town conditions.
Okay, motion by Kohler, second by Bollig to approve the CUP with the 12 suggested conditions in our packet. Supervisor Bollig,
Could you
questions?
please, thank you. Could you please tell me what general liability insurance with a time element exception? Could you define that a little bit for me? I am not a insurance expert.
All right, perhaps we can have Mr. Dibdahl provide insight.
Good evening. So, I'm a consultant. Thank you for the
Well, yeah.
opportunity to be here.
Yes.
Chairman Miles, and supervisors. What is a general liability policy?
Well, actually, I'm wondering what's the time element exception? How do you define that further so someone like myself can understand?
Okay. So the total pollution release from the time it begins to the time it is discovered in the Enbridge policy must transpire in 30 days. That's the time element. And then there's 90 days to report it to the insurance company. It used to be referred to as sudden and accidental pollution insurance, but the words sudden and accidental were removed from the insurance coverages in 1986. So no one really could define what sudden meant. So they went to, well, we're not going to argue whether it's sudden, because nobody can figure out how darn quick that needs to be. So we'll just say it has to happen within 30 days, start to the time it's discovered. That's the time element.
All right. I know that was in there, but I didn't really understand it.
It confuses insurance people.
Well, I'm not an insurance person, so you can see how I must have felt. And please stay there. Another quick question for staff. Do your conditions include the town conditions?
Yes, they do.
Okay. That's all I have for now.
Okay.
Questions from any other committee members?
Actually, if I would ask one more, could you please indicate what The environmental liability insurance covers that the general liability insurance does not cover.
Okay.
The EIL versus the GL. Is that
Okay.
right?
So on a general liability policy, all general liability policies have a pollution exclusion. General liability policies cover bodily injury and property damage, and then if somebody sues you, defense costs. An environmental policy works the same way. It covers bodily injury and property damage plus defense costs, but it only applies if the source of the loss was the emission discharge, escape, release, or dispersal of a pollutant. So what's excluded in the general liability policy is covered by the environmental impairment liability policy. The environmental impairment liability policy, since it's designed to cover environmental impairment, like a spill, has coverage elements that are not incorporated in a general liability policy. There's no reason in a general liability policy to be talking about covering cleanup costs. It excludes pollution out of the chute. But an environmental impairment liability policy covers cleanup costs, restoration costs, which means put it back to the condition it was in before the environment was impaired, restoration costs, cleanup costs, and damage to natural resources. So if you kill the fish, it'll pay to put the fish back. The glitch in a general liability policy that Enbridge ran into, and also lots of people run into the same glitch. When you ask for a general liability policy to respond to cleanup costs, it doesn't look like the definition of property damage. So when you slam your car into somebody else's car, you damage their car. That's property damage. If you get a letter from the DNR that says you owe them $22 for every dead trout, that doesn't look like property damage in the definition of the insurance policy. So an environmental policy is designed to ensure that loss exposure of general environmental damages.
We're good, thank you. That's all I have for Mr. Vidal.
Okay, thank you. Supervisor Matano.
Thanks. Thanks, Mr. Dibdahl, for your report. Very informative. And as Supervisor Bollig indicated, it uses terms and discusses concepts that are beyond most of us even still. But I wanted to ask about the concept of additional insured versus named insured. I have note that it's on page 16 of your report, and kind of the significance of that. And is it true, my understanding is that we are accepting additional insured status, though named insurance status would give us more sway in the matter if we had it? In other words, I'm confused, and rather than start with the framework of my confusion, perhaps you could outline the differences.
I would be glad to.
Thanks.
So the question is the difference between being an additional insured, named as an additional insured, versus being an additional named insured, and those are very different things in an insurance policy. If you are a named insured, you have equal rights in the policy as the person who bought the policy. Where that would be broader coverage for the county, in reality, insurance companies are very unlikely to provide that insurance to Enbridge. It would be highly unusual to ever do that. The county doesn't have an equity stake in Enbridge. They're not joint venturing with Enbridge. I've never seen it done in 30 years. Being an additional insured, on the other hand, is common practice in general liability policies and somewhat in environmental policies. There, the county who might face vicarious liability or liability by association for something Enbridge is doing gets the benefit of Enbridge's insurance to defend the county. So if the county goes out and does something on their own to create a pollution loss, the Enbridge policy wouldn't apply to the county. But if Enbridge does something to create a pollution loss at the pump station, the Enbridge policy would defend the county as it would defend Enbridge, and it would provide a separate defense for the county. So being an additional insured is a good thing, common practice. Adds very little cost to the Enbridge policy, I would assume. I don't know that for sure, but usually that's thrown in without additional premium.
Another question would be, in the report you used the Kalamazoo River spill as a benchmark because it's a recent data point in a similar state. And that was $1.2 billion, but you recommend that we go for $25 million worth of coverage. Could you explain why we should be comfortable with that disparity?
I knew that question would come up.
Why not lead with it then?
So the question is, if a company has a $1.2 billion known loss event, then what would be a reasonable point estimate to figure out what the maximum cost of another loss event would be? And the textbook answer would be $1.2 billion. Everybody had one. I looked at where it's located. So in Dane County, we're not, in the aero maps and so on, we're not by a flowing river. And that was the biggest problem in Kalamazoo. If there's an event in Dane County, it would seem to me that we would know about it really fast. And there would be human intervention to stop things from getting worse. There's other practical limitations beyond Enbridge's control in how much environmental insurance at $25 million is even available on a pipeline. So without using Enbridge's name, I called environmental insurance underwriters, very senior people at their companies, and asked them how much insurance they'd be willing to sell to a pipeline. And that number is somewhere around $100 million if you bought everything that was available. That's it. So when I wrote the insurance specification, I wrote it to endure for 30 to 50 years, that it won't have to be changed. And if there's $100 million today and we haven't had a hurricane or a big earthquake, there's lots of insurance capacity out there, then that doesn't necessarily mean that there'll be $100 million even next year. Insurance markets go up and down like the stock market. So I picked a number that was significant and material. I also looked at on-land pipeline spills, and most of them are well under $25 million. So most on-land pipeline spills are not that expensive. Where when you get on water, the BP oil spill was $40 billion. Very different. So taking all that into account, accessibility, availability, over time, enduring, I said $25 million of environmental insurance on top of the $100 million that Enbridge offered previously. That is a good offer on their general liability insurance. And their general liability insurance companies in 2010 actually paid most of it. So out of $650 million, probably 40 insurance companies, all but one paid. So the policy that they have in place actually works. They replaced that insurance company that was the holdout for $103 million from the 2010 spill. So whatever the issues were, and I'm not privy to them, whatever the issues were on the $100 million litigated insurance coverage case should not be incurred again with the current insurance companies that they're using. That could change on May 1st. Could change. But their insurance policy is purchased from an insurance company that specializes exactly in what they do and has a history of paying those kinds of claims. So I was fairly confident that that was good insurance to $700 million.
Thanks. Just one follow-up on that. You spoke in your report about the value of the underwriting process as a test for whether the company stands, essentially almost performing a quasi-regulatory role, evaluating the company. Could you speak to that?
Yes, the insurance underwriting process is extremely efficient at transferring knowledge on a global basis. It's incredibly efficient. So I did an expert witness case where I was trying to figure out when insurance underwriters learned of a particular gasoline additive, because exclusions seemed to hit that Monday, all at the same time, from New York, Chicago, and Texas. It was related to oil. And there was a 60 minutes presentation at 7 o'clock on a Sunday night. And at 9 o'clock in the morning in Houston, brokers were getting insurance quotations with exclusions for this material overnight. The regulators got around to banning the substance 4 years later. The insurance companies knew about it overnight. And they knew about it from London, and then as the time zones changed and people came back to work, they knew about it in Bermuda, then the underwriters in New York knew about it. So it's instant, and it's global. So what I was looking at to meet the county's objectives of this needs to be a long-term plan, one of the advantages of asking for some amount of purchased environmental insurance is wherever the underwriter is, if that insurance company, and most of these environmental underwriters are global insurance companies, if there's a problem with pipeline welds in Saudi Arabia and they use the same welds in the US, the underwriters will know about it before anybody else, probably before the pipeline companies themselves. Because an insurance underwriter gets data in from lots of different pipelines, and they'll see the trend before any single owner of a pipeline would, most likely. So the underwriting function to serve as the canary in the coal mine for best practices has more value than the actual $25 million limit.
Mr. Chair, I'll turn it over to my colleague. Okay.
Thank you.
Thank you.
Other questions? All right. If no one else has any, I do have a couple. Supervisor Natano covered a couple of my questions. So just a couple of things I'm curious about, sort of related. I found the description you provided regarding the time limit, the time element type of insurance, and the double and triple negatives that can be in these policies. Interesting. And the fact that that type of language, especially the old idea of sudden accidental, has led to a considerable amount of litigation from those insured not getting coverage in certain circumstances, and that those cases can take a long time. Wouldn't it be safe to say that litigation cost outweighs the cost of getting an EIL policy in the first place? Potentially. If litigation is going to take years.
The cost of insurance coverage litigation, I was an expert.
Well, for somebody who's insured to challenge claims not being paid under these terms that are somewhat nebulous, as you described.
Litigation costs to recover contested claims can run into the millions of dollars. I was personally involved with one where our side spent $3 million. I didn't get paid
But that cost exceeds
the cost exceeded the premium by a lot.
the premium. And given that, and given the nebulous nature of the pollution exclusions and exceptions to the exclusions and so forth, what is? I guess I'm curious what the motivation is not to get EIL outright for some of these companies. I mean, I know it's a speculative question, but
Why not get environmental impairment liability insurance outright if you are a pipeline company? Well, it clarifies coverage glitches, but there may be availability issues. Enbridge
in the insurance market.
In the insurance market, Enbridge has a $30 million deductible for spills before their insurance even clicks in. And there are a lot, most environmental insurance companies that sell that product line offer less than $25 million of insurance. So their total capacity is less than the Enbridge deductible. So environmental insurance in that situation would look like it was not material.
Okay. Thank you. Like I said, Supervisor Montano asked me other questions, so that's it for me. One more check. Anybody else? Question, Supervisor Cola.
I don't know if you've had time to tally up the people who have registered in support or in opposition.
Perhaps while Majid's doing that, any other supervisors with questions? All right, then we'll entertain discussion on the motion. Thank you, Mr. Hugh. Supervisor Ballard.
Yes, I have a question. First of all, on transport speed within the line at the current time. Somewhat. When we started this back in, I think it was August or September, I think it was about 400 barrels per hour.
400,000 barrels per day. Yeah.
And what is it up to now?
Currently, it's about 560,000 barrels per day.
Okay, and when you get the other 11 pumping stations online,
So right now, we'll take a step in May up to 800,000 barrels per day, including the Waterloo station and a few of the other ones. And then once we get the Waterloo station and all of the upgrades planned, it'll be 1.2 barrels per day.
what happens if you don't get the Waterloo station?
There's a reduced rate, but we will still increase the rate of 800,000 barrels.
So it's still over 800,000.
Yes.
Does that create a safety problem in itself?
No, it does not. We've designed the pipeline to be able to handle that rate.
Right. Thank you. I have a question on the conditions. I don't know if someone else from Enbridge would like to answer it. Insurance itself, the EIL insurance, it's a relatively new condition since you last were here.
Thank you. I haven't appeared before. My name's Tom Piper. I'm an attorney here in Madison and represent Enbridge.
And again, this is a new condition since we last spoke.
Yes.
And I'd like to hear your input regarding that.
Yeah, and I thought Mr. Dibdall really touched on the concern that Enbridge has, and that is the time element portion of it. And as he properly explained, Enbridge's CGL policy has a pollution exclusion, but then there is an exception to that, and that's the time element exception. And that says that notwithstanding that pollution exclusion, pollution release will be covered if it is discovered within 30 days. And what Mr. Dibdall just said was he expects that if something happened in Dane County, that Enbridge would know about it very fast. And that is the whole point here. The difference, the main difference I'll get to the coverage differences that Mr. Goodall talked about a moment ago. But the main difference here between the CGL and the EIL is that the EIL will cover a spill irrespective of when it is discovered. The CGL, which he is recommending $100 million, which Enbridge has no problem with, will only be covered if it is discovered within the 30-day period of the release. In today's world, the likelihood of a release not being discovered within 30 days is virtually none. The Marshall spill that everybody has talked about, and is the largest, as Mr. Dibdall recognized, in the known recent history at a $1.2 billion worth of cost, was discovered in 17 hours, which was too long. And so Enbridge has expended millions of dollars to improve its monitoring and improve its ability so that it won't go as long as 17 hours before a release is realized. The Adams release here in Wisconsin within the last couple of years, which resulted in about $10 million worth of cleanup, which Enbridge paid promptly without going first to its insurance, was discovered within literally minutes. And so to say you need an EIL policy on top of the CGL policy because of the risk that a release will not be discovered within 30 days would be like insuring something that is virtually non-existent to happen in Dane County. That's the major concern with incurring the cost. I've seen a report that the cost has been estimated for this at $10,000 to $15,000. We don't have an exact number yet, but that is way low, extremely low. And our intelligence in going out to the market has determined that it will be more than 6 figures, and that's 6 figures annually. So when Chairperson Miles asked, wouldn't it make sense to buy the insurance coverage in order to get around the having to challenge coverage issues? Not when you have 6 figures annually projected out some 40 years. That's why Enbridge doesn't buy ELI coverage. That's why the industry doesn't buy ELI coverage, because it's duplicative and it's just not necessary. Not when you're looking at those levels of cost. With regard to the types of coverage, and Mr. Dibdall is absolutely accurate that Enbridge is in a fight with one of its insurers over what kinds of coverage are available under the CGL. But on $650 million worth of coverage, $550 million of coverage with insurers was never challenged. And when you have a property damage challenge brought by a landowner, that covers cleanup, that covers restoration. This one insurer is an outlier who claimed that it wasn't because it wanted to try to limit its liability, but we predict that's not going to prevail, and that property damage does cover the same types of things that the EIL coverage does. So when you have an EIL coverage already subsumed within the CGL because of this 30-day period, and no longer in the era of challenging sudden and accidental. Yes, there's been much litigation over that, not since this time element provision has been incorporated into the underlying insurance. So, main objection that Enbridge has is you're forcing the company to buy something that is less than duplicative. It's just unnecessary. The other thing that I noted in Mr. Dibdall's report was, and I may have just read it wrong, but it seemed to be saying that Dane County could make a claim against this EIL coverage if it's an additional insurer. That's true only if Dane County is sued. Dane County could not just say there has been a release and there's property damage in Dane County, insurance company, because we're an additional insurer, give us the money to help landowners clean it up. It's only a policy that insures Dane County if it is sued. And all Dane County is doing here is issuing a CUP. That doesn't expose it to a risk of liability for which it is likely that it would ever have any coverage under this EIL policy. The EIL policy is a fallback for Enbridge if landowners sue, but Enbridge has never had a history of going to its insurance company before it did the cleanup. It had $1.2 billion worth of damage in Marshall, largest in history. It had $650 million of insurance. Did it make claims under its policies? It did. Did it delay the cleanup before it got its insurance coverage? Not 1 minute. Under PHMSA regulation, it was out there immediately to do the cleanup. And then it goes back and it fights with its insurance company, but it doesn't put the landowner in that fight. And that's why Enbridge doesn't believe the EIL is really required.
Supervisor McConnell.
I actually had a question for staff, which is, why is this of unlimited duration? We've seen in other CFDs that time limit serves a lot of useful purposes, and things change over time. And why isn't this a 10-year permit?
That's certainly at the committee's discretion. I mean, I think we weren't given, often when you see that time element included as a condition in a permit, it's because we're getting a request for that specific time period. For example, with a quarry, I would liken this to, say, a cell tower where it's an indefinite period of time in which the use is going to operate. So it has not necessarily been customary, but in this instance, given the concerns that have been raised, certainly I think that would be a reasonable concern and something that you could do, whether it's 10, 15, 20 years, 5 years, perhaps enabling you then to revisit some of the concerns about the financial wherewithal of the applicant to meet its obligations in the event of a spill.
Thanks. Well, if I could speak to that, I think that Majid sees where my thoughts are going. We've read a lot of materials about this, and people talk. I think I'm a little confused what I read where, but let me just sort of, rather than present proper citations, I think in Mr. Dibdall's report he talks about the fact that companies that make their money from transporting oil their financial condition today might not be the same 20 years from now, when arguably fossil fuels are not as dominant a portion of our energy economy as they are today. So query what happens if Enbridge isn't the economic dynamo. And yes, actually, as it comes back to me, Mr. Dibdall's report was talking about, well, over time, some years hence, the pipeline might be showing signs of wear and tear from age, and at the same time, the oil economy may be starting to fade into history, and therefore Enbridge's financial condition might change. So it seems that it would be logical to put a time limit on it. And then Peter Anderson wrote us an email speaking of a few other things that he thought we should do. And I'm not, the first one was a coverage limit should include an annual escalator to keep coverage current with changes in prices. And I'm loath to do that. That's sort of, I feel like things should have a set time limit, that we have to issue a permit that suits our needs. So I would move to amend the motion before us to specify a 10-year duration. And that's all, Mr. Chair.
Okay. So there's a motion to amend the recommendation to approve the CP with this stated conditions, to add a condition of a time limit of, I'm sorry, Supervisor McConnell, did you say 10 years? Okay. And at that 10-year period, what would happen? We renew the, all right. Is there a second to that? A second? Okay. That motion fails for lack of second. Other discussion or questions? If there's no objection, I know we've started debate, but given Supervisor Bollig's question by Mr. Pryor's response, I wanted to get a response from Mr. Dibdahl to something, if I could, please. So we heard the concern from the representative of Enbridge stating that that because of their early detection of spills, that the CGL type insurance suffices, EIL would be unnecessary. But there's other benefits to the EIL other than the time element, as I recall from your report. So would you highlight those?
Sure. So the environmental impairment liability policy doesn't talk about things having to take place within a certain number of hours or days. It responds when the loss is reported, and it provides coverage elements that are specified in the policy that are absent in a general liability policy, but as accurately portrayed. In the past, the general liability policy of Enbridge, but for one insurance company, paid out on those cleanup costs, natural resource damages. Although if Wisconsin state law is that it is not covered, but it doesn't matter actually, because that policy was purchased in Canada and the company that doesn't want to pay the claim apparently was in London. So that coverage litigation isn't in the United States, not in Wisconsin. But I brought this along just to illustrate how much insurance coverage issues there are on his property damage covered under a general liability policy, and this is all in the United States, but there's 5 cases per page and it's about 10 pages long, and they are all over the map. Yes, there's coverage, no, there's not coverage. So nobody really knows the answer to that, but the Enbridge policy underwriters have done a good job of paying those claims.
But certainly with the EIL, there isn't that ambiguity.
There should be no ambiguity for those coverage parts in a policy designed to ensure exactly the kind of loss you get when you have an oil spill.
I thought there was something in the report that stated that in the EIL that restoration of, well, maybe it'd be covered under the CGL too, but yeah, it says here, EIL insurance policies contain specific insurance coverage for cleanup costs, restoration costs, and natural resource damages associated with an oil spill. I guess when I read that, I took that to mean, well, that's what EIL covers, CGL would not.
A general liability policy, CGL policy, does not have reference to those coverages specifically. It just says direct physical loss.
Okay, thank you. Okay, so any other questions, or are we ready to continue debate, discussion? Anyone else? Comments of this discussion? Somebody had asked for a count. Just step over in.
Been a moving target, but all I have is 43 opposed, 37 in favor, 7 that did not indicate support or opposition.
Okay. Any other discussion on the motion? All right, then I will call the vote. All in favor say aye. Aye. Opposed say no. The motion carries. All right, that takes care of that.